Can you give us a little bit of insight here into some of the liquidity concerns and liquidity issues that we've been hearing from traders and analysts? The idea here that just getting folks on the phone, whether it's a futures broker or a swaps dealer, do we have a sense here that the people who need to be in contact with those folks, the folks that you oversee, that they're able to get in contact with those people?
Yes, thanks so much for having me on. And as your viewers know, the CFTC regulates the futures, swaps, and options markets. And so the last couple of weeks, we have pivoted our resources to take this challenge head on. And we're really focusing on two things. First is really understanding what's going on in our markets. So the issue that you've raised, are people able to continue to talk to their brokers? That's something we've approached with a series of targeted temporary no action relief to allow all of those interactions, which normally occur over recorded lines with time-stamping systems, to go ahead and occur with social distancing. So far, we're hearing that everyone's able to reach and get in contact with their brokers, but we're continuing to do anything we can to continue to facilitate that, because the interesting thing, of course, is that right now, our derivatives markets are more important than ever, because everyone needs to go to them to hedge risk, many of which have been brought on by the coronavirus.
So I'd like to hear a little bit more about that, because my understanding is that traders are not supposed to talk to clients or customers directly on their mobile phones or home phones. So they're left kind of in limbo to only communicate through email or electronically. Are you saying that they're able to do that now through rule suspension or through workarounds?
Yes, what we've done is we've granted no action relief that allows them to go ahead and no longer have to speak on recorded lines. So they can go ahead and contact and take customer information. Now, we've asked them to make sure they have notes and make sure they're documenting it. But anything we can do to continue the markets to be orderly and liquid, to keep that trading going, that's what we've done. So if you visit our website, which is cftc.gov/coronavirus, all of the no action letters that we've done are listed there and explains to whom they apply and what are the basic rules that we've lifted during this temporary period where there's social distancing taking place.
Heath, I want to ask you, I mean, as you said, you've provided relief because obviously these are extraordinary situations where the existing rules may not apply. What about just pure functioning? You mentioned the importance of being able to access futures market liquidity, particularly at a time like this when so many instruments are not as illiquid. Do you feel comfortable that the work from home relationships that so many trading places have implemented are not impeding that liquidity period? Regulations aside, are people able to make the connections with their brokers, with their dealers in a timely way?
Well, right now, we're not hearing that they're not, and we're trying to maintain constant contact with the exchanges, with the market participants. And so if people are having issues, we invite them to reach out to the CFTC, and we encourage market participants to do the same. But right now, we are seeing unparalleled trading volume. So there's clearly trading going on in the markets. And the other big thing we're focused on, apart from keeping the markets open, allowing Americans to access them, is making sure that the markets have the stability they had. And on that note, I'm pleased to report the markets are functioning very well. That infrastructure, margin calls are being made, margin is being collected. So even though we're having unprecedented historical periods of volatility, we're not having the instability that we had in 2008. The system itself remains strong, at least thus far.